Hello, welcome to the Market Cover. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician and Portfolio Manager. Thank you for joining us here, the last Market Cover of January. So happy to have you. We've got some really big market moving news earlier this week, as often happens in markets, and I think this in itself is an important point. It's very rarely on the calendar. Hey, we've got this out in the future and we're progressing to it, and then X or Y happens. It comes out of left field, and that's certainly what it got this week with DeepSeek and AI spending. So we'll cover that, and then we'll take a look at some of the technicals underneath the hood, especially when we get this sort of market movement and market rotation. All right, so let's dive into DeepSeek and AI spending. So DeepSeek is a Chinese-based artificial intelligence. Think of it as competition for OpenAI's ChatGPT and a lot of the innovation that we've seen here in the U.S. And so what they did is they launched their app for AI and AI chatbot development. And there's a little bit of this, or quite a bit of this, in the technical piece of it that's just a little bit outside of my skis. But what we do want to understand are where the numbers are moving and how they're moving CapEx with regard to the big technology companies. And so the big difference here by DeepSeek is that they were able to produce this technology using less capital expenditure that has been used so far. So think of NVIDIA chips and some other chip makers, which have been very heavily needed inside of the technology hardware infrastructure to be able to produce this technology. By being able to utilize less on the semiconductor space could really move the needle in terms of how this space progresses. And I think this is a great chart to kind of show you the road that we were on, and any change to this could very much be market moving. So these are 5 of the big technology companies that have capital expenditures towards semiconductors. And as you can see, in 2025, the expectation is that among 5 of these, just these 5 companies alone, we're looking at $250 billion in AI infrastructure, and a bulk of that, very much of that, going to a concentrated set of companies. NVIDIA, of course, being one of the big beneficiaries. But it's not just the level of $250 billion this year, but I would look at each of the prior years and how, with the exception of 2023, where we're kind of following the soft 2022, there has been a dramatic rise since 2017. And so that growth rate has very much been behind what we've seen, the growth rate in those stocks like NVIDIA. So anything that would come in and throw a curveball and change, and believe me, these 5 companies would love to see a little bit less coming out from CapEx and be able to produce the results with less expenditures. If they were ever able to do so, that would be a needle mover for how money is spent. And there's many other ancillary effects as well. So it's not just the technology sector, but there have been kind of burgeoning areas around and adjacent to the semiconductor space related to the AI developments that's going to need to take place. Think something as boring as utilities. So all of this spending in AI production is going to need a lot of power generation. So we've also saw a pretty big reversal inside of utility stocks. So a lot of runway for this story to play out, but that's some of the background and the areas in which we'll be thinking through this as we go forward. So Andrew, I'll turn it over to you to kind of look at the stock and the market impact.
All right, thank you, Adam. So with the big announcement of DeepSeek and then the major impact it had on U.S. equities on Monday, we saw a large chunk of it was, as Adam was talking about, the importance of NVIDIA and the chip spending to grow the AI infrastructure for a lot of these companies. NVIDIA, again, is one of the main players there. And because they've had so much success and so much adoption of this AI technology, the belief that it will really be such an impact on so many U.S. companies and industries, that they've grown to be one of the largest companies in the world. We often talk about the Mag 7, and they're very much part of that, being one of the biggest companies in the US, if not actually globally. In fact, they account for over 7% of the S&P 500. So whenever we see a company like that really see a big move, in fact, on Monday, it had actually contributed 83% of the decline we saw in the S&P 500. So the market, the NASDAQ dropped about 4%, S&P was close to 2% intraday. And we can see then, looking back in time, when the NASDAQ's had a really large drop, how did, being a very primarily tech-driven index, looking more broadly at the S&P 500, how many stocks actually were going up or down on these really larger declining days? And so we can see in the bottom panel of this chart that the number of stocks in the S&P 500 that were actually positive. And I've done a little bit of math and some coding there to only show the times when the NASDAQ is down over 3.5%. And you can see it's been pretty rare to see this many stocks actually be positive on such a down day. In fact, it would actually be near the bottom in 2018, and then we'd have to go all the way over to the financial crisis near the lows there in 09, where we saw another time where we had this many S&P 500 stocks up on such a strong down NASDAQ day. So this tells us that overall, when we did see panic selling on Monday, a lot of stocks actually were rising. In fact, nearly just about 60% of stocks moved higher on the day, and over 80% actually outperformed the index. And so we just see how much impact, we talk a lot about this on the market cover, how much impact these Mag 7, these mega caps named do. In fact, again, like I said a little bit ago, 83% of that decline was just due to one stock, was Nvidia. We can actually look, the next stock below that was Broadcom. Combine those two, encompass the entire decline, just because those are such massive stocks that they moved so much, they really pushed the market as far down as it went. So this actually, we view this as a positive, and we're recording this on Tuesday. We'll see how the whole market trades this week. But when we see the market see a decline, but see most of the stocks actually advance, shows us that we aren't seeing a lot of panic selling in individual names. So this is a positive sign from a breadth or participation perspective, and tells us that that type of decline maybe won't be protracted unless we start seeing a broadening out of a lot of that selling that didn't happen on Monday. So we're looking at one day's event. It's important for the reasons Adam was talking about in the growth and exploration in the AI space. But when we look below the hood, which is what we're doing every single day, the selling actually was pretty small. It was just a local focused amount of selling in certain names that really moved the needle for the indices.
Well done. And I think, yes, it's another nod, certainly, for being diversified. When we looked at our portfolios and what we're driving things, we're very thankful to have parts of the portfolio, actually many parts of the portfolio that were rising. Yes, those pockets that were connected to the NASDAQ 100, certainly painful, but by having those spaces around, it was a great reminder of why we didn't get too sucked up and too overexposed to just one absolute trend like AI spending. Because that's our philosophy, is that we really can't know when things come out of left field that can knock us off. And who knows, it might be a one and done, and here we are off to the races. But I promise you, people coming into this year, the question wasn't whether there would be a slowdown in spending with regards to AI. It was whether or not the stock prices justified those level of earnings. So seeing something that could question that trajectory is just kind of mind-blowing for everybody all at once. So rest assured, diversification, very important into what we're trying to get done here at FEG. So, hey, thank you. This was a little bit longer than we typically go, but certainly when we have more important events like we've had this week, we want to take time to really unpack that for you. If we can be of service, or you have questions on all this, or want a greater understanding, please don't hesitate to reach out. Give us a call, 800-928-4001, or scan that QR code and do it electronically. Thank you. Have a great weekend.